Morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments on this Monday, June 10th. Well, we ended last week on the defensive, and we're there again here to start off this new week. We've got the wheat market down roughly around 5 cents in the winters, down 3 in the spring, down 3 cents in corn, 6 cents in beans, $2.50 in meal, and down in the neighborhood of around 15 points in the soybean oil. Beans and meal making new lows for the move. The corn had a gap lower opening. The weather is not as adverse as it had been, so I think that that's been taking a little bit of the edge off of the marketplace. We are going to continue to see rains moving through with systems, but once again, not as inundating as they were for the past 6 to 8 weeks. So they're kind of backing up the market a little bit or drying up buying interest at this time. And then up trade's also preparing for tomorrow's USDA report, the monthly S&Ds and crop production. We had a report a month ago which was basically a non-bullish report, and we've rallied ever since then. The trade and/or is kind of surmising, and others surmising how aggressive does the USDA can and will be on this report versus a month ago, when it's still quite unknown on what the farmers actually have planted and various programs that they have offered to them of what the final acreage number is going to be. So we're assuming that they're going to take a little bit more of a conservative approach, and on paper that should also continue to be somewhat of a non-bullish affair, at least once again on paper. So those two things are seemingly weighing on the marketplace here today. We're going to go and have crop plantings come out after the close. Weekly guesses for the corn planted is around 80%, for the beans 60%. We're also going to get our initial crop ratings for the corn, and the trade right now is looking for around 50% good to excellent on it. Later on this morning, we'll also be getting our weekly export numbers, and that'll kind of tie into perhaps what the USDA wants to say tomorrow as far as the demand side of the sector goes. As far as politics, over the weekend, apparently it looks like the tariffs are off for Mexico from the U.S., but it's kind of murky in the sense that there's no real details. Trump says that he can come back anytime and reinitiate the tariffs if there's any problems with the accord right now. And then there was also a byline that there were going to be, that being Mexico buying large amounts of ag products. Nothing was really said about that, so kind of murky there. Continues to be murky with the Chinese. People are trying to think about the trade talks may have some type of revigoration at the G20 meeting, but there too, the optimism is really, really low right now, and it seems like that's going to be even murkier than what's been going on with Mexico. As far as the commitment of trade report goes, the trade did get net long the corn market, even a little bit longer than what we surmised, so they did their function from the last report, covering their positions. There was covering in the wheat and in the beans as well, but not as much. They still have a net short position there as well. So anyway, we're going to be a little bit on the defensive. We're pulling back to our pivotal price areas, which somewhat was surmised. We're knocking down a little bit of the stochastics and RSIs, and maybe we'll try and set up in this pivotal price area, wait the USDA to see what they have to say, and or if we want to get even a little bit worse, maybe back to the halfway point in the markets from the May rally to the most recent highs. Once again, these are my opinions, not that of ADM or ADMIS. I thank you.